Welcome to the fourth quarter, the future of sports business. Siraj, I don't know if you saw this tweet by someone named Jack Settleman. He's actually a friend of ours now, but the CEO of Snapback Sports, a sports media and entertainment company. He made a tweet that went kind of viral a few weeks ago, and I'm going to read it. He says, "A free idea for front office sports or Sportico. First take for sports business. All the talk about sports business these days is just reporting. How about some analysis and discussion? Some potential topics, tanking in the NBA and have Mark Cuban on as a guest, Barstool and Netflix, has this worked out so far? NBA's influencer strategy around All-Star Weekend, the NBC and Olympic Committee gating content. Will Fox adjust that for the World Cup that's coming up? Peacock's merger convos. This is just in sports media too. Way more going on in sports business as it relates to college athletics, NIL, investing, etc. With the success of TBPN, you don't need a big audience. You just need the right audience. I'd imagine a highly produced and engaging show would get decision makers around the sports industry tuned in." So I was very amused at two things. One, how brilliant this idea was. And two, the fact that somebody else tweeted exactly what we were thinking and cooking up in the background for weeks.
I mean, we've been talking about this for a while now. I feel like most of sports business, it's engaged through reporting, through headlines, and I feel like there needs to be some active conversation about it. So that Jack tweet, when I saw that, I was like, I immediately shared it to you as well. I was like, man, I think this is catching along. Maybe we got to launch this soon.
And the world works in weird ways. He actually, hit us in the Instagram DMs, and he pulled up to our office.
Shout out to Jack. We actually filmed a little short form interview with him. It was pretty awesome to have him in the office.
Yeah, so the comments around this tweet were mostly around a few things. So one, folks were flooding it with their own content saying, this is exactly what we've been doing. And, if you take a look for yourself, not necessarily the case. And then others saying they'd 100% tune into something like this. But an interesting take that I saw from another popular voice in the sports business space, John Wall Street, he quoted the tweet saying, "There's a reason ESPN doesn't cover sports business anymore. The fans don't care." So honestly, I tend to agree. It probably isn't for the mass market, but that's why we started the fourth quarter show. I think it all started from our newsletter, which we started a few years ago, breaking down the businesses of sports and entertainment, and that's being read by team owners, investors, and executives. And then we started taking that content, putting it into short form, to distribute on Instagram and TikTok, and we reached a completely different audience, a much younger audience, and I think we found content market fit, and I think there is an appetite for this younger generation to consume this kind of knowledge on their feeds.
And honestly, I mean, I get where John Wall Street's coming from, but based on an experiment with short form, I actually disagree. I think that there's a lot of fans who are interested in the commercial side of sports, and they actually want to break into the business or understand it more because obviously it's highly lucrative. It's a multi-trillion-dollar industry. Shout out to Apollo. They had a great report on why there's a massive opportunity here. And I think that a lot of people are catching on and they see sports and entertainment as the new wave or the new trend, right? A lot of people grew up wanting to be doctors and lawyers, but a lot of people nowadays want to be content creators in sports, or they want to work and be a sports agent, right? And I feel like there isn't that ecosystem or atmosphere to have that natural dialogue. So I disagree with them, and I think that's what we're trying to do here right now.
Yeah, so while in most scenarios I'd think that two other people with a mic talking about sports is probably not needed for the world, I think this is, and that we're bridging a gap that we see in this sports media of business kind of void, and we're going to fill that. And I think we've addressed kind of the elite of the industry through our newsletter. We're reaching a completely separate audience through our short form, and I think this show serves as a bridge between the two of those. And my thesis is when Michael Rubin, for example, at Fanatics, announces a new initiative like Fanatics Studios, or launches the Fanatics prediction markets, a new launch. Why is he going on CNBC? My thought process is that he should be coming on a sports business specific show. So for people, leaders, executives that are across this industry, I think this is the platform that we want to build for them to be, the sports business outlet for them to come on. So enough describing the vision, and let's show you.
Let's do it.
So the biggest business story the past few weeks has been Madison Square Garden Sports, the publicly traded sports and entertainment holding company, just had its board unanimously approve a plan to explore a possible spinoff that would separate the New York Knicks and the New York Rangers into two distinctly publicly traded companies. So just for some context before I want to talk about this analysis with you, there's three main companies that have spun out under the Dolans, really, who are the ownership group of the New York Knicks. So you have MSG Sports, which is the currently talked about asset that they're thinking about breaking up. So the assets under that holding company are the New York Knicks, the New York Rangers, the Westchester Knicks, the Hartford Wolfpack, the MSG Training Center, and then they have an equity non-controlling stake in an esports company that they previously got into. And then they have MSG Entertainment, which is their venues. So everything from Madison Square Garden itself, the theaters at Madison Square Garden, Radio City Music Hall, Beacon Theater, Chicago Theater, the Rockettes. And then they have the Sphere Entertainment, which is the Sphere venue in Las Vegas, as well as a few other properties and the networks that come
And so
around it.
these are all separate businesses now?
They are. So specifically this news, though, they're talking about MSG Sports. So forgetting about MSG Entertainment and the Sphere Entertainment, MSG Sports, they're basically trying to take and build and basically break that up into two separate companies. So you'll have the New York Knicks as a standalone company and then the New York Rangers. The rough shape of the split is already pretty clear. So the Knicks would include the Knicks company would include the New York Knicks plus the Westchester Knicks. And then the Rangers company would include the New York Rangers plus the Hartford Wolfpack. And then MSG's stated rationale is that a separation would let investors more clearly evaluate each asset on its own rather than a bundled valuation that it currently exists in the public markets right now. And it gives each team more strategic and financial flexibility and a more defined business focus. So I want you to break down this transaction.
Yeah, so I had a fun past week actually diving really deep into this. I don't know if you're a reader of the Fourth Quarter or not, our newsletter, but this is actually analysis that we did. I went back to my old investment banking roots to crunch some numbers. Shout out to Index. It was a great tool to use on the side, little AI financing tool. But one thing that I want to look at is what does this strategic flexibility mean, right? Like, why on earth does it matter that the Knicks and Rangers have to be split up? And the reason is because the private and public markets actually value these different franchises or value the franchises differently. So I did a little, analysis. CNBC and Forbes actually do a great job posting, how much these franchises are worth, where they're valued at compared to their competitors or other teams. And right now they have the Knicks valued at $10 billion and the Rangers at $3.8 billion.
So this is in the private market.
This is in the private market. So imagine there was a new buyer that wanted to come in and buy the Knicks or Rangers. This is probably the price that they would pay for. Now it's a little bit different. I know you talked about the other holdcos. MSG, Madison Square Garden, the actual venue, is not part of the MSG Sports. So technically that's valued different, and Forbes bakes in the arena valuation. So theoretically, both of these franchises combined would be worth around 11 to 12 billion. But if you actually look at where MSG Sports is trading right now, it's trading around 7.5 to 8 billion. It's been wavering a little bit. And so a huge discount. That's like $3 to $4 billion of lost value for all shareholders. And if you actually put this in perspective, and there's a little bit backstory behind this whole fiasco of them spinning out. Yeah. There was an open letter from Boyer Value Group. They're actually an activist equity research fund that has paid a very close attention to MSG Sports and Knicks, Rangers, etc. And they've been calling for a spin out for over a year. There's actually an open letter to Dolan that they posted on Substack June 2025, and they were essentially breaking down a similar valuation analysis. And what they found was that the markets are kind of underpricing the Knicks, and they're valuing the Rangers at $0.
Which is crazy. So explain to me, let's break that down a little bit. So MSG Sports market cap as of this morning is around $6.2 billion, right?
Yeah.
Give or take. And then you're telling me this combined private market valuation of the Knicks and Rangers is closer to $13 billion. Why is there such a big, gap?
Yeah, so there's actually been a little bit of I wouldn't say correction in the market cap because they've now announced that they're spinning out. So a lot of people are buying the stock. So the market cap's definitely going up. But there's a fundamental main reason. This is like the lingo that a lot of investors drop when it comes to investing in MSG Sports. And it's what they call the Dolan discount. It sounds a little bit crude, but let me explain what it is. So James Dolan, obviously, and the Dolan family have a big control of the Knicks and Rangers, right? Like if you were to ask anyone who owns the Knicks, they're going to say James Dolan, the Dolan family, right? But it is a public company, and there's a lot of public vote, obviously. They actually only have a 21% economic interest in the entire MSG Sports holdco, but they have a 71% voting power. So any real decision that needs to be made about both franchises, it has to go through the Dolan family. Now, if you look at sports franchises entirely as a whole, most of them aren't actually, major cash flow businesses, right? Like a lot of them operate on break even. Sometimes they're operating on a loss. And a lot of times for public investors, they like to make their returns off of dividends, share buybacks, et cetera. Obviously, the stock going up. But for a sports team, it really comes down to whether they're willing to sell the business or not, right? And with the Dolan family having owned the franchise for nearly 30 years, right, and they have such, powerful voting control, there's a less likelihood of them actually selling the business. And because of that, and because they're bundled together, which I'll go into in a sec, they're less likely to sell. And for that reason, they're not valuing it to the way the private markets would. The second thing is that because the Knicks and Rangers are bundled together, a lot of investors are like, hey, I want just exposure to the Knicks, or I just want exposure to the Rangers, right? Like probably more likely the Knicks over the Rangers just because NBA valuations have been skyrocketing. But because they're bundled together, and actually if you look at the financial reporting, you can't tell the difference between the finances of the Knicks or Rangers. They're both muddled together. They don't separate them. So it's hard to see. If I was like a real, investment fund in the public markets and I want to do a deep dive on the Knicks valuation outside of how Forbes and CNBC are evaluating them, it'd be extremely difficult. And I think that's what caused this major discount between the public and private markets.
Yeah, and I actually misspoke. The market cap is actually $7.6 billion as of this morning. So just wanted to clarify that. But so you just basically mentioned the public views bundled assets in the public markets as a discount compared to standalone prices. Is it because that, if I want to own a piece of the Knicks and the only way to do so currently is to buy into MSG Sports stock, but the thing is I'm also getting exposure to the Rangers and maybe I'm not a fan or don't want to own a piece of the Rangers and vice versa. There's people that want to own a piece of the Rangers and not the Knicks. And because of that, that's why this bundled asset is scaring away is a little extreme, but there's not as high of a demand as a standalone piece, which then basically makes the discounted price. Is that essentially
right? Exactly. And the fact that there's not much visibility on whether James Dolan, the family, would ever sell the business or sell a minority stake, which would help appreciate the value. So another interesting thing, so in that letter, they talked a lot about the tax benefits of this. And I think this is a big one. And apparently I'm going to break this down quite simply, but it's going to start off a little bit complex. But apparently by spinning off, it's a tax-free event according to IRS section 355. So essentially, typically, if you were ever to sell a certain asset, right, the actual tax bill on that capital gain comes from the difference between when you first initially bought it and when you sold it, right? So let's look at the Knicks. The Dolan family bought the Knicks in, I believe, the late 90s, and I think it was around for $300 million. Now, let's say they sell it for around $10 billion. That could be a tax, that difference, which would be around $10 billion or $9.5 billion, $9.7 billion, that could be a taxable event. But if you spin out, right, you avoid that tax because the actual split between the Knicks and Rangers isn't considered a sale or an event of a sale. So you avoid those taxes. And then when they split, right, their value is going to be aligned much more with the private markets. Actually, very interesting enough, the Atlanta Braves are probably the only other major. Yeah, we're actually from Atlanta, so we're big Braves fans. Shout out to the Battery too, great place. Need to go back there pretty soon. But the Atlanta Braves, right? They're one of the few other public companies in sports that are a U.S. franchise, and the private markets have them valued around $3 billion, and the public markets have them valued around $3 to $3.1 billion.
So more or less the same.
Yeah, more or less the same. So there's a clear difference here in just like how these two operate and how the markets are valuing them. And I think with the spin-off and getting that tax benefit, you're also giving visibility on if I'm spinning off, you're more likely to sell a minority stake because now a lot more buyers would be interested. I feel like that's the only reason why you would spin out. And so that's actually my question to you. Do you think that they sell a minority stake or even sell the business in the next 5 years?
Yeah, I mean, I think it's interesting. Possibly, and I'll answer your question more directly in a second. I kind of want to talk about kind of logistically for like retail investors what this would look like, right? So you said this is a tax-free spin-off for the existing shareholders. So if MSG spins out, for example, and the Rangers are into a separate company, you would still own a stake in the existing company, which would be the Knicks, right?
Yeah.
MSG Sports. And then you would also own a proportion, the same proportion of the Rangers company. So it's essentially, that's like a finance speak for that is pro rata, meaning everyone gets their slice in proportion to what they already own. So the Dolan family would almost certainly still own a large stake in this, right? After the spin, because they would receive shares just like everyone else on a pro rata basis. And the key question is not just like ownership percentage, it's voting control. And you touched on this earlier. So right now, MSG Sports has a dual class structure where Class A shares get 1 vote per share and Class B get 10 votes per share. And on top of that, holders of Class B currently have the right to elect up to 75% of the board, while Class A holders only elect 25% of the board. So I think that you are buying into a piece of potentially your favorite sports team, but it's not the same as owning one. I just wanted to, I think that's like a good thing that we should kind of share there.
But for Knicks faithful, it might be a good investment for your 401k.
Yeah, I agree. And like MSG's also said there's no timetable on this deal. They're still kind of exploring it, right? And as you mentioned, the market loved this announcement. When Reuters announced that this was happening or they were exploring this, MSG Sports shares jumped more than 16% in a day, which was really cool, hitting a record high. So it shows what a strong signal of what retail investors are thinking, right? That this combined company is trading at a discount, and that once they have a potential, spin out into 2 public companies, then their shares would appreciate and kind of level set to a fair sports team pricing. But yeah, I mean, to answer your question, I do think that this will go through. I do think eventually the Dolans will have the opportunity to sell. But yeah, I mean, I think that the real thing for Dolan, for why this would happen, I think is like it increases value. It unlocks value without, kind of like losing control of the enterprise. And yeah, you don't need to surrender control. You don't need to endure the politics of a sale. You don't need to explain why you sold the Knicks. And you still get the the upside of the valuation if the public investors kind of also re-rate the assets higher. So yeah, that's what I think. But do you think what do you think? Do you think they would sell at what price do you think they'd sell at?
Yeah, so I have an interesting take. I think that the way that they're going to see this appreciation in value is if they sell a minority stake. So I think there will be more pressure right after the spin-off that Dolan and the MSG Sports, which will now be Knicks, Rangers management, decide to sell a minority stake in each of them, right? You're seeing this with a lot of different teams. Obviously, I want to make sure I'm saying this right. Bin Lin, right, the Chinese billionaire, he just bought a 1% stake in the Dolphins Holding Co. for $12.5 billion, right? That's a massive value appreciation based on the transaction. And I think that's what the Knicks and Rangers need in order for them to see that value in the public markets. Obviously, James Dolan, the reason why he has a public company for MSG Sports is that all the fans and all the people involved get to see the value growth of what he's been doing with the franchise, right? So I don't think he'll be opposed to it. I think at some point, maybe in the next 2 years, he'll probably sell maybe a 1 to 5% stake in either the Knicks or Rangers. For the Knicks, maybe at like my guess, $11-12 billion valuation. It could be even more just because there'd be so much demand from that, especially for institutional investors. And then for the Rangers, maybe, 4 to 5 billion. Then I don't know what the price tag would be, but if I'm Dolan, I'm keeping the Knicks forever. Like, you really have the key to the city. Like,
he
maybe
grew up in New York.
Billion? Yeah, he grew up in New York.
This is his hometown team. Yeah.
Maybe 20 billion? 20 billion, I think?
I don't know. It just seems like a price seems so irrationally high that he probably wouldn't sell, but for the right price tag, maybe $20 billion. Yeah, that would be he'd probably sell for 20. So yeah, $20 billion, probably he'd sell. That seems extremely high, but some comparison and food for thought here is that some recent transactions that have happened for NBA, high ticket trophy assets were that the Lakers changed hands for $10 billion at a $10 billion valuation last year. The Celtics sold for $6.1 billion with a later valuation implying closer to $7.3 billion. And at the same time, Sportico's 2025 valuation pegged the Knicks at about $9.85 billion, so close to $10 billion, only behind the Warriors and Lakers. I think that the New York Knicks are like the premium asset. They're up there with the LA Lakers. It's like such a marquee city, such a renowned brand. I think that
you also have such an elite fan base.
Yeah, and I think you're paying for more than just a trophy asset. You're paying for the franchise value, the scarcity premium, of course, the control premium,
access to Madison Square Garden,
huge. The legacy premium, the New York premium.
Yeah.
I would 100% agree with you that it would be north of $10 billion. And if I was James Dolan, I don't know if I would sell it.
So another thing that I've been seeing in the news, and I feel like has a big impact on sports, but no one has been really talking about it. Obviously, Paramount is acquiring Warner Bros. Discovery for $111 billion. And this is going to be huge for cable, right? Because you're going to have CNN and CBS coming together. But another big thing is this CBS Sports combining with TNT Sports to make potentially a sports broadcasting powerhouse. We'll love to hear, what's going on and how we should look at things. Yeah,
so just to summarize, as of March 6, 2026, so this morning, this happened the past few days, but the Paramount, Warner Bros. And Netflix three-way saga is no longer a three-company debate. It has turned into a full-blown power realignment in media, like you mentioned. Paramount has agreed to acquire Warner Bros. Discovery and outbidding Netflix with a total bid of $111 billion. And the deal is expected to close in Q3 later this year, pending shareholder and regulatory approval, of course. Paramount said it would pay $31 per share in cash for Warner Bros. Discovery. Reuters reported the broader transaction value at roughly $110 billion, including debt, $111 billion, like I mentioned earlier. And Paramount has already told investors the combined company would carry about $79 billion in net debt, which they're leveraging the hell out of.
No, 100%. It's almost like a private equity deal, I swear.
Yeah. There's also some interesting people that were involved in the deal, right? David Ellison, son of Oracle founder Larry Ellison. He has started this brigade of his media empire. Started with Skydance, obviously his company. Earlier, I believe last year, he got the deal with Paramount.
Yeah, I think it was there was talks 2024, maybe it closed end of 2024.
Yeah, okay. And then now he was, it was roughly $16 billion market cap, Paramount Skydance. Warner Bros., the Target acquisition, had a market cap coming into this deal of roughly $79 billion. Crazy that there's a company that small and has the backing of the right people to go make this a large scale effort. But Netflix for a while was the winner. And the prediction markets themselves were skewing towards Netflix. And you actually made
I made a Cal sheet bet. I messed it up though. I made a Cal sheet bet that Paramount would buy Warner Bros. Discovery, but it was based on a timeline of end of 2025. So obviously missed that deadline or missed that timeline by 3 months. So unfortunately, it didn't get to cash my trade. But I have a lot of takes on this. If you want to hear what I think.
Give it.
So I mean, I've always thought that Paramount always had the financial resources and I believe very powerful connections that they were able to make to help maneuver them in the right position. Obviously, there was huge like antitrust concerns with Netflix buying, the second biggest streaming platform in HBO Max and having all that content IP access. But what I think is more interesting, and we actually wrote an article about this, speculating on this, back in I think early December, when Netflix and Paramount were really in the thick of it, about how this could affect sports. So as you can see, sports media rights are extremely lucrative. I think that's honestly what boosts a lot of the valuations for these leagues and teams, right? You have the NFL, they have a $111 billion deal, or $110 billion deal, across the streaming platforms and certain broadcasting platforms, CBS, Fox, Amazon. Then you have NBA with a $76 billion deal, right? They're just continually getting more and more expensive, right? And to be honest, the companies that have the cash flow to do it and to continue to pay for these media rights deals are the streaming platforms, right? If you look at Amazon and you look at Netflix, they're cash rich. While a lot of these broadcasting platforms, I mean, look at HBO. TNT lost the rights to the NBA, right? That was not a good sign, right? And at some point in time, they're going to continue to get priced out. And so this combination is actually huge, in my opinion, for the sports broadcasting realm, because you now have a colossus in the broadcasting space, bringing CBS Sports and TNT Sports together. Their entire rights library would now include the NFL, NHL, MLB, NCAA, Big Ten, and UFC, now that Paramount just signed that deal.
Which is crazy.
Crazy coverage. And if you've been noticing, a lot of these broadcasting platforms are trying to position themselves as on-demand as well, right? You have NBC with Peacock, but you have Paramount with Paramount Plus. Obviously, that's going to get combined with HBO Sports, which is essentially TNT. And so now you'll be able to have on-demand access for all this types of content, which I think is huge because it positions themselves as the must-have partner for a lot of these sports leagues. Because look, we've already have ingrained connections with them. And so that's really good defensive strategy, or I would say more of an offensive strategy against Netflix and Amazon, especially Amazon, who's like eating everyone's lunch. Netflix has a weird strategy with these one-off events, but at some point in time, they're going to only be the ones that aren't priced out from this media rights explosion.
Yeah, I agree. But to honestly push back for some points of debate, one thing is that, fewer big bidders usually means less competition pressure and potentially, higher prices. So in the medium term or kind of the short term, it might seem like, this is the go-to hub for everything sports. But eventually, if, Paramount Skydance is kind of is controlling a lot of the pricing and the end user economics. I don't know if that's in the best interest of the end consumer, end user sports fan. So just some food for thought. And also, Larry Ellison was a part of a deal recently that bought T4Q's, right? Basically the piece from the Chinese government.
Right, like Oracle has a piece of that.
Yeah, with Silver Lake, A16Z, and there was a few other folks involved in that deal. But now, with the Ellison family controlling social media or having a stake in a business interest stake in one of the largest social media platforms, now they have already had a very big interest in the media play. Now with this Warner Bros. Discovery deal as well, making that even bigger, the question might come up of are the Ellison family and that much centralized control of information, entertainment, and media, is that in the best interest of everybody? So, I think there's both sides to it.
But from a business move, I think it's smart because, okay, for example, right, one of TNT's assets is Bleacher Report, right? That's probably the most popular social media for sports, right? Like sports consumption. And what's really interesting is obviously streaming is moving towards the younger audience, but a lot of people are consuming sports through social media, right? Now, if I was a media entertainment company, or if I was, very much over-indexed on media, which David Ellison is, right? That's been his brainchild for a while.
Guy.
He's a media guy,
Yeah.
right? if I'm a media guy, I'm going to look at all the different outlets where I can produce content towards, right? And through, right? And through his connection with his dad, with Oracle, having a piece in TikTok, you now have a direct entryway through social media, especially with a premier content platform on social media like Bleacher Report, that's connecting with the younger audience, right? Like, there's a stat here that I want to pull, but I'll get to in a sec. Most young people are consuming sports through social media. You want that angle, right? The younger population are more going to consume, or I would say like the millennials, like later millennials, maybe younger millennials, are consuming sports. They would rather consume sports through streaming platforms, right? Because a lot of them, saw Netflix at the beginning, grew up on streaming, didn't understand cable as much because they were a little bit younger. And then you have older communities who are on cable, which obviously that's been their broad exposure through CBS and now through TNT. So I think you now have all these three different platforms to get to the end user. So from a business perspective, I think it's interesting. What I do disagree with you on is consolidation, I think, is relatively not okay for the end user. So for example, like, let's say sports ends up just being only on streaming platforms. The only people who can get media rights are Netflix and Amazon Prime. That gives them extraordinary pricing power because sports is probably like the most important IP that you can have. And so you have to have Netflix or Amazon Prime to watch. Now, I will say they're scaled quite a bit, so like I feel like it actually could be relatively affordable. Right now, you need like 5 different accounts just to watch sports. But I do think that it's important to have some form of broadcasting player in the mix because a lot of older people aren't on Netflix, aren't watching sports on Amazon Prime, right? Sure. They're still going to stick with their cable box. They're never going to cut the cord. And I do think that that's like the heart for, honestly, like a lot of content or a lot of viewers for the NFL, for example, or the MLB. I feel like NBA is really leaning towards social media. But for those two leagues specifically, I think you do need to have some broadcast exposure.
Yeah, and I think like we should have taken a step back instead of just jumping into the fire. So why this deal is even happening in the first place, right? Like linear TV, traditional cable television that's programmatic, it's fallen to historic lows. So it dropped below 50% of total US TV viewing time for the first time in July 2023, so a few years ago. And yeah, there's a rapid rise of obviously streaming and consumption through social media and other types of media consumption. But yeah, the reason why this huge story is even a thing is that legacy TV is weakening. And streaming is expensive. Premium sports remains one of the few most reliably watched products that was kind of holding up the linear TV networks. And what the deal was that Warner Bros. Wanted to split into the studios and which included HBO Max and some popular IP, and then the streaming business, and split it from its kind of declining cable business. And Netflix wanted a piece of the studios business and, kind of the IP and the streaming business, and Paramount, Skydance wanted a piece of kind of everything. So yeah, that's kind of the reason. It's kind of interesting to think that like, what is the future of linear, right? Like, do you think this will single-handedly
I think it
keep
saves
it afloat?
Linear. Yeah, I think it saves linear some way, shape, or form, right?
Okay, but like that's like a Band-Aid though, right? That's not like an actual.
It is a Band-Aid, but I do think it needs to be smoothened out a little bit. Like, imagine for your grandpa, for example. Let's say grandpa in the Midwest who'd always been on cable, never cut the cord, and all of a sudden in 5 years he's like, I can't watch sports on my cable subscription anymore.
Yeah.
Like, that I think is a significant frustration that like you can't just immediately go into. And I think Paramount buying Warner Bros. Discovery provides that, that leeway, right? It's like, yes, it's a Band-Aid, but it's like a smoother transition, because if they had spun out, Warner Bros. Discovery spun out, that cable business would have been terrible, right?
The third and final topic that I want to talk about with you is the WNBA collective bargaining agreement drama that's currently happening. The WNBA CBA battle is on who gets paid from the league's next era of growth. The current labor dispute started when the WNBPA opted out of the 2020 CBA in October 2024, arguing that the old deal no longer matched the league's new reality after record attendance, viewership, and a new media rights package worth about $200 million annually was signed. I think this is super interesting. There's a lot of stuff I want to dive in with you and want you to break down. But essentially, this boils down to the WNBA players want a bigger share of the league's growth, and specifically tying it to gross revenue, 26% of gross revenue specifically, and a first-year team salary cap around $9.5 million. The league wants, has offered to massively increase salary of the WNBA players, but on a more controlled structure. So all they're trying to do is avoid a lockout that might be impending because nothing has been agreed to right now. And if a lockout happens, that disrupts the flow of the regular WNBA season, and therefore the proper revenue structure and kind of revenue generation that it makes throughout a sports season. So
deadline for this deal, I think they aiming for March 10th, and then May 8th is when the season starts. They got to also
that's in a few months,
free
man.
agency to get signed. I mean, this is like pretty impending. Like something needs to happen.
So break this down. Go a little layer deeper and kind of talk to me about the signal that's happening. Remove the noise.
Yeah, so I mean, there's been a lot of big updates that have been happening. Honestly, a lot of drama, which we'll touch upon a little bit. I don't want to jump to the drama because you probably have already seen it on X, etc.
Yeah.
But I want to break this down to brass tacks. So the WNBA, they're looking for 70% of net revenue split, right? And the WNBA wants a gross revenue. The way that this is working out is
before you go into that, explain the difference between gross and net.
Yeah, so net revenue is after certain expenses that go into essentially, making money from your sport, right? So whether it's, marketing expenses, right?
Yeah.
SG&A, et cetera, all these financial terms. Really, that's kind of why this is an issue for the WNBPA. That goes into net revenue. So it's actually taking out a piece of the pie that would have actually gone to the WNBPA. The gross revenue is typically actually how a lot of sports leagues do it, right? So for the NBA, it's called basketball-related income. That's essentially gross income or gross revenue, and their split is 50%, right? All the WNBPA is asking for is 26%. Now, if you want to actually break this down a little bit, and obviously they have a different salary cap too, I think they'll be able to negotiate that, but WNBA is asking for $5.75 million. Players Association are asking for $9.5 million. But what this really comes down to is that the WNBA thinks that this will be a major profit loss for them. Actually, there was a Front Office Sport article where they cited that it would cost them $460 million over the next couple of years. But there actually wasn't that much details as to how they broke down that financials, given that the salary cap increase isn't much, but the gross revenue might actually be a serious issue. Now, that's a little bit of a concern for the Players Association because that opacity of what goes into a net revenue is quite the issue. Now, in my opinion, I know it's tough. It's probably the most tough situation because everyone has a weird circumstance around them. So let's look at the WNBA, okay? They aren't your typical league because 42% of the WNBA is controlled by WNBA owners. That's really, really low, right, compared to any other league. And the reason why is because they actually, 42% of the NBA, they split it, right? So the NBA actually was helping prop up the WNBA. And if you actually look into the lore of how this all originally started when David Stern was commissioner, there's actually a lot of so this is a good quote from Stanford economics professor Roger Nolan. Roger Nolan was talking to Front Office Sports. The NBA has always viewed the WNBA as a sideline. They never thought of it as a standalone line of business that they're trying to maximize the value of. It was a way to use the arenas in the summer when they're not being used. That's always been the conceptualization. And that is completely different now because the WNBA is huge, right? I mean, objectively, I remember doing analysis on this when we were writing a piece on Media for Equity. They're on a 30% viewership growth rate every single year. Caitlin Clark is obviously huge. They have a lot of young players who got a ton of traction during the NIL era when they were in college, and then now they want to play in the WNBA, and they're helping bring in a new generation of fans to the stadium. But because they have this massive ownership split, a lot of this money isn't going to them. For example, the Players Association are citing, look, we contributed to massive growth, which is true, right? They're expanding to new franchises because of the players, right, and the gameplay. Obviously, you have Toronto coming up pretty soon, Philadelphia, Detroit, Cleveland, etc. A lot of them were even paying $250 million expansion fees. I believe Philadelphia did, and a few others. I think 3 of them did. So in total, you have $925 million in expansion fees across 5-6 new teams that they've been adding. And they're like, hey, we want a piece of that pie. But in reality, a lot of that money actually might be going back to the NBA to, essentially try to loosen that tag, right? Also, they own 42%. And if it's really considered like equity, that money goes to them. And so a lot of this growth isn't being captured by the league. And so the way I see the league, they're in a growth stage. They're not that mature. They want to keep as many dollars to growing the league because they believe that is the best future for not only the league, but for also the players. But the players are a bit frustrated because, look, they're the reason why they're growing so significantly and they're not getting that access.
Yeah, I think, candidly, the players are in a higher position of leverage than the WNBA, and I think you have a different
disagree,
take. Yeah,
because of recent news. But.
Yeah, but let me just give a macro landscape kind of snapshot here. So the WNBA sold a 16% stake for $75 million in 2022 to a group of investors, including Condoleezza Rice, Pau Gasol, Nike, among a few NBA team owners, among a couple others, to fuel expansion and growth. So they were, they've already given up a chunk of equity pretty recently. There's now adjacent women's leagues like Unrivaled Basketball and Project B that are offering more lucrative salaries than the WNBA. They might not be as big, obviously, but these are alternative avenues for these players to grow outside of this main stage. And the players themselves are growing profiles bigger than the league, right? You have different podcasts now, Sophie Cunningham's, like Angel Reese. You have different athletes now making different public appearances bigger than their on-court personalities, which I think skews the personality or kind of skews the leverage in their favor. But yeah, I mean, I just see it hard. I don't see a very easy way for the players to not eventually get what they want in this situation.
So one thing that I'll agree upon is the new leagues, right? Project B, that's a new international league that's going to be launching pretty soon, about in a year, next year summer, so right before the WNBA season. They're paying $1 to $2 million contracts. Actually, crazy enough, the Players Association president, Nneka Ogwumike, hopefully I'm pronouncing that right, so please excuse me, she actually signed with them as well. Same with Sophie Cunningham. And it's $1 to $2 million contracts, typically that you're not able to get in the WNBA. Now, that does put pressure because you're essentially saying, look, these are all these other opportunities that we have, and we're going to play hardball because we have access to that. The point of view that I have is, while there are a lot of players that have the spotlight, and they honestly could be considered bigger than the league, like a Caitlin Clark or an Angel Reese, majority of the WNBA players are not like that. Right? Some of them might not have that spotlight, right? This is their chance to shine.
That's true.
And there's been some cracks in the fold amongst the Players Association. Actually, a leaked open letter from Breanna Stewart and Kelsey Plum. They're actually executive members of the Players Association. Actually wrote, this is a quote from ESPN. They wrote a 3-page letter Monday to Players Union Executive Director Terry Jackson expressing serious concerns about how the PA is handling the current negotiations for a new collective bargaining agreement, including the lack of adequate player involvement in the process. In private communication obtained by ESPN, Plum, the first VP of the union, and Stewart, a VP, requested a change dynamic between the PA administrators and the players and said, we do not feel like we have an adequate seat at the table in these negotiations. So essentially what I'm seeing is that the Players Association are playing extreme hardball. Obviously, you have stars like Breanna Stewart and Kelsey Plum, who are actually a part of Unrivaled, so they have these access to different opportunities. They're seeing that a strike is imminent, right? It's very close. Actually, the Players vote almost unanimously for a strike to be held if they don't get what they want. But in reality, none of them really want that to happen. And I think it'd be devastating for the broader women's basketball community because a lot of free agents won't get paid. A lot of players, they might not have the opportunities to go, play abroad and for the same amount of money and for the same amount of viewership, right? You can get that stardom and maybe access to an Unrivaled and Project B during the offseason. If you showcase yourself on the WNBA, that is the main stage. And I think the league understands this, and they see that the players are starting to realize, look, we have to come to an agreement. Maybe we can't get this gross revenue, but there's some way that we can do this because, in my opinion, it's more catastrophic for those certain players. Obviously, I think it'd be devastating for the league, and you probably agree with that based on your sentiment. But that's my point of view. I think a lot of these players end up getting screwed.
Yeah, honestly, that's very fair. Well, this is actively developing, and it's such a hot timeline, so we'll see what happens. There's a lot of motion every day. I'm sure the next time we sit down, next week when we sit down the fourth quarter show, again, we'll have an update on this, but and we'll be talking about more stuff around it. But to wrap the show, I think that it's a very interesting time to be in sports business. Let me just say that.
Oh, 100%. And for those who end up watching this, really appreciate you for tuning in. This is our first show, so it's going to be a little bit raw and have some edges.
Get
here
better
and there.
every single time.
But we're going to get better every single time. We think that this type of conversation should exist. Obviously, would love to hear your feedback as well in the comments or DMs, etc. Whatever this outcome looks like we'll be posting it all over. Please be as brutally honest as you can because
we're asking for that.
Why not, right?
Yes.
Jack was actually asking. He was like, "Yo, I'll be brutally honest about this when he sees it." So, it was great to do this. Obviously, Sid's my best friend from home, so super fun to do this, and we want to keep doing it.
Thanks for watching the fourth quarter.